What is up, guys? Welcome to another edition of Market Marauders. Speed the market one trade at a time. New Market Marauders investment channel helps you find the best deals in the market. All right, so going to be talking about some things that happened this week. Very interesting week in general as far as markets are concerned, and a very eye-opening experience for me. Now, background on me: I've been investing for about, I would say, 2 years seriously, and potentially 5 years on and off before that. So 5 years total, 3 years on and off, and two pretty seriously for the time being. But I've never, I guess, in my investing period, seen something sort of like what happened this week. So I'm just going to give my breakdown of some of the things that I think are going on and why some of the things are a big deal and some things I think are not a big deal. So without further ado, let's jump into it. First, starting off this week, we had Apple, which had its earnings, which was historical earnings. I think the company's being ran fantastically by Tim Cook, in my personal opinion, who is the CEO. I like what he did with dealing with the pandemic and the growth of the company, and that definitely showed. Their revenue was up 20% and EPS was up 35%. So in terms of numbers, what does that mean? The company had an all-time record of 111.4 billion, which was that up 21% year over year, and their quarterly earnings per diluted share, or that EPS from earlier, of $1.68, which was up 35%. International sales accounted for 64% of the quarter's revenue. So overall, the company had a fantastic earnings and historical earnings, which is great for any company. Any company would love to have that. That was due to their iPhone wearables and other services that they had. They made a lot of revolutionary moves for the company. So moving from their silicone from Intel to making their own, as well as a lot of different products that were released. We had the first 5G iPhone that was released, which is the iPhone 12. So overall, a very, I guess, progressive move for the company moving forward. They definitely touched on a lot of social issues as well as social justice issues, which I think was pretty cool. They took a stand on some of those. So overall, the company just stayed relevant for 2020. I think it's the best way to say it. Now, after that happened, the stock plummeted. So the stock was at around 140, 144 level, and it went all the way down to 130.21. So it fell quite significantly after its earnings. So it seems like, stocks valuations are too high, but it's even when they beat their too high estimate that the stock still goes down. So this was, very confusing for me. I would assume, like, if a company beat their earnings, then the stock would go up, especially if it was way above their expectations. So I was reading articles before the earnings, which were like, oh, it's going to be 100 billion, and it ended up being 111.4 billion. So 11 million more than what they actually estimated, and it still went down. So while this was going on, there was kind of a secretive online battle going for the control of GameStop. So at that exact same time, around the 27th, GameStop was at about almost $100 even around that time frame. So there were talks on this popular site called Wallstreetbets. So if you're not familiar with it, it's Wallstreetbets is a Reddit site or a Reddit page that talks about different financial things going on. I've been watching it on and off beforehand. I think they have a lot of funny memes on there, so I fully support some of the things that they talk about on there, because it's a financial community at the end of the day, which is the reason why I built, Market Marauders, to be a financial community. So I don't nearly have the amount of numbers as Wallstreetbets does, but I do, appreciate what they do and some of the humor that they have behind it, because it is hard to find humor, especially when dealing with subjects of money, losing money, gaining money. But I digress. So around that same time, GameStop had been, just rallying like crazy, and then it shot up the next day all the way to $300. So it went to $300, which was pretty crazy. And then the next day it went all the way up to $482.58, where it topped out. Um, this was, to me, like an amazing thing that happened. I obviously, in my personal opinion, thought from my, only 5 year background trading was like, okay, this is going to eventually fall. This level is too high. Let me put a put out on this. So I personally put a put out on it. But what happened that day kind of shocked me, as for the whole financial community in general. So I was using the platform Robinhood. So I use Robinhood as well as Webull. I use Robinhood a lot more for options, and then I use Webull for more chart analysis. I do have a couple of stocks with them as well. So anyway, I was using on this particular day Robinhood. So on Robinhood, I opened up my account to look at my puts, because I was like, oh, this is going to go down. And then it popped up, a little statement with a caution icon. And the caution icon said, you can close out your position in this option, but you cannot buy any additional contracts. So I thought that was weird. I thought maybe they were having problems, due to the high volume. And then, I was like, okay, well, screw that. I'm going to try to sell it anyway. So then I went to go try to sell it. And then I kept getting an error. So it kept saying, error, we've encountered an unexpected server error. Please try again. And I got this like consistently for majority of the day. So I had 10 puts. I was trying to sell them, and it just kept giving me an error. Like the whole day I got an error. So I was like, I have no idea what's going on with this. I just said, forget it. I went back after, I kept getting those errors and nothing would go through. I went back, looked at my account, and it was already sold. So my option sold for the price that I was trying to do, even though I kept getting the error and it said it wouldn't go through, and it was popped up on my portfolio. So if you've used Robinhood before, you look at your portfolio, it'll tell you how many options you have at the bottom, under how many stocks, above how many stocks you have on like the side. But it kept telling me I had the GameStop option. So I went and checked my phone like after lunch, and I was like, how did this sell if the server was, full? Because I was like, forget it. I'm not going to, worry about it. So it seemed like there was an issue going on with that. But from what I've read, and I'm not, taking sides on this, that it is a deeper rooted issue than what is actually happening. So, you can go and look at a lot of people's YouTube channel, and they can break it down, way more than me. They have time to just go through and do all the research on it. I really don't have that time to do research on it. For me, I think, it's kind of a fine line between allowing people to trade. I mean, we're supposed to be in a free market, so allowing people to trade what they want to trade, when they want to trade it, and then protecting, people who make terrible trades. So it's kind of a give and take on that. So where do you have so if someone, I guess the problem that I'm seeing is if you have someone who, goes to a poker table and they have $1 million, and on every single poker table or every single hand, they're like, I'm going all in, all in. That may last for a couple of times, but eventually people will, call your bluff. And it seemed like, other retail investors stepped up to the table and were like, okay, we're going to call your bluff. And then they called their bluff and they lost all their money. So instead of leaving the table, they decided to go to the casino and complain to the casino that they lost their money. and them being friends with the casino decided to kick the people who were winning money out and not allow them to play any more poker. So that's the best analogy I can give of what is going on is the people who want to play poker, even though they won their hand and played the game fair, had less money to put up for bet, are being kicked off of the poker table because the people who decided to go all in decided to make risky bets. So that's kind of how I see what's going on. Hopefully, all this gets sorted out and gets fixed. But you may be saying, why is that a problem? Why do you see that as a problem? Well, I see that as a problem, and I think the divide comes when you look at like these ETFs. So if we look at Vanguard, high yield dividend, if we look at the top, shares, so they have like 27 million shares. So like the most amount of shares they have for this portfolio, it's Bank of America, AT&T, Pfizer, Comcast, Cisco, ExxonMobil, Verizon, Intel, which I think are great. These are all great companies. They have fantastic track records. You're not going to see a GameStop in these portfolios. So even if you go to VOO, which is another common ETF for the S&P 500, you have Apple, General Electric, Bank of America, Microsoft, AT&T, Pfizer, Comcast, ExxonMobil, Cisco, Verizon, Wells Fargo. You have all these large institutions that are the basis of most of these ETFs. So I kind of see a great divide coming where you can't really base your way of investing on old fundamentals. So even though Apple is a great company, they've continued to go up. We saw proof in the numbers that the stock was still going down, even though they had great fundamentals, which will affect the value of this entire portfolio, given that they have 320,000 shares of that. Now, as a company, I'm looking at it from both point of view. So if you're the company, you can't say, hey, I'm going to go restructure my portfolio every time one stock has a home run. So if a company like GameStop has a home run, you can't be like, I'm going to restructure my entire portfolio so that, we'll have a GameStop this time, because it's an anomaly. It's not something that's always going to happen. And then from the other side of retail trading, there's kind of more people who jump into the market. And I admit, don't really know what they're doing. I was one of those people when I jumped into options trading. I had no idea what I was doing. So I just watched a bunch of YouTube videos and tried to figure it out. But coming from that point of view, I was not one person who was trying to find the, I guess, most long-term value. But when you have those people in the market, it definitely throws off the fundamentals. So I definitely see a great divide coming in the financial institution on just the way people trade and the way people look at finances. It's no longer, feasible to say that retail traders have no power, because the GameStop thing was kind of proof of that. And it's also, not one thing to say that hedge funds don't have any power as well. I think both, sides have power to influence the way things are traded. So I'm not going to say either one is considered market manipulation, because I don't want to put that term on either side. I think they're, good intentions on both sides. I think hedge funds have good intentions. I know I would be stressed out if I had to manage people's money all the time. And then, for me being a retail trader, I know it's stressful trying to grow my account personally. So the stress comes in both aspects of that. That's all a part of investing. But I feel like there has to be sort of a equalizer per se when it comes to this topic. So hopefully, you know, there were some lessons learned out of the things that came from this week. Not saying that there, weren't malicious intent on both sides, because I think one thing people aren't looking at as well as some people really just threw money into, you know, the GameStop stock. I mean, there are people who I haven't even heard of talking about stocks that were like, yeah, I'm putting money into GameStop. But I mean, on the channel, I've gone over GameStop multiple times and looked at their financials were trash, to be honest. But there are people who are like, you heard about GameStop, I want to invest in GameStop. I'm gonna open up an account to invest in GameStop. So, you know, I don't think people do that not trying to find a quick, flip on their money. And then also from the other side, with hedge funds, you kind of have to know when to back off at that point in time. So if there was a lot of people jumping into it, if it was from a, forum that's not a reliable source, I wonder why they decided they were going to jump in instead of, sit out of this one. So I think kind of both sides learned lessons from this whole thing that went on. And now we can see on the horizon that now there's a new thing that people are talking about, which kind of is not the first time, but the second time. First, it was on TikTok. A lot of people were talking about it. Now it is on Twitter and back on Reddit, Wallstreetbets, and that is Dogecoin. So Dogecoin is currently at 5 cents, so a nickel basically. Their market cap is 6.8 billion, and their volume is about 28.7 billion per hour. So I mean per day. So per day it's about 28.7 billion volume wise. And then for circulation and supply, there are 128.2 billion Dogecoin out there, and people are talking about trying to get this thing to $1. In my opinion, I think it will take a large push in order to do that, since there's so many Dogecoin out there, but they're also not that expensive. So, someone with, big wallets could do a lot of damage really quickly as far as accumulating Dogecoin. So, I think it's a very interesting cryptocurrency. They do have a baseball team. So they have a baseball team called California Doge, which I think is pretty cool as well. They sell a lot of merch on their website. So they have, different jerseys and hats you can buy, but it's a minor league baseball team that is funded by Dogecoin. So I think that's very cool. They also had a sponsorship. So they sponsored a NASCAR event. So they sponsored Josh Wise's car, and this was through Reddit as well. So Reddit is where the community where they kind of set all this stuff up, and they sponsored it. So they had a wrap. It was wrapped with the Doge logo, which I thought was pretty cool as well. And on Twitter, there's always different memes talking about trying to get this thing to $1. You all see like people like Elon Musk talk about this coin all the time. But overall synopsis, I think Wallstreetbets is here to stay. They definitely have solidified themselves as, I guess, the new way that people look at financing. So it's no longer, old investing. There's new investing as well as old investing that are in Wallstreetbets. There's some people who make like really intelligent contributions, and then there's like jokes and like memes and stuff on there as well. Overall, I think the financial community kind of has to realize that there's a big shift going on in the financial institutions, with this retail trading being accessible to everyone. People kind of demand that to be the case. So if you're going to have an app that is accessible to everyone at all times for a free market, then it has to be accessible to everyone at all times for a free market. If you're working at a hedge fund, you got to know that your rules are a little bit different than retail trading rules. So, just lesson learned from both sides. And I hope that, from this, we can just grow investing in general. I would say that's the one positive thing that came from this whole thing that happened this week is more people were talking about investing. And that's the whole goal, in my opinion. That's the whole goal of my channel, or both my channels. And that's the whole goal, reason why I got into investing is to, spread the knowledge of investing. So at the end of the day, more people know about investing, whether it's from memes they saw, them joining Wallstreetbets for the first time, or them getting on Twitter and saying, what's Wallstreetbets, what's GameStop, what stocks. Oh yeah, I should invest. At the end of the day, that seems to be what happened, and I'm happy that that was the outcome. So definitely going to be an interesting week moving forward. I saw some comments that the SEC is going to be involved in looking at some of this stuff that's going on. But overall, investing was had by all, and more people got into investing. So that's going to be the positive outlook that I'm looking at on this situation in general. So drop a comment down below. Tell me, were you all able to lock in some profits on GameStop? Were you all able to, ride the train up? Or are you looking for alternatives like Dogecoin? Make sure you hit that thumbs up. Definitely helps the YouTube algorithm promote the videos. And if you're listening to on the podcast, thank you for listening. Definitely appreciate all the support on there as well. And I'll see you guys next time. Peace.
Thank you.